VC is great, venture capital is great for financing certain kinds of businesses. There is a need, in my belief, that a huge financing need among different kinds of businesses as well. So small and medium-sized businesses need a tremendous amount of financing. And there's a tremendous gap in the kinds of financing and the amount of financing they can access. Venture capital is not going to fix that. And venture capitalists may understand that, but many people think VC is going to be the cure-all. And so I think we need to create more awareness around the kinds of businesses that venture capital can successfully finance and drive to success. But we also need to talk about what is the right alternative financing vehicles to help drive economic development and growth in Africa. Well, I think one of the realizations coming from Silicon Valley and the US tech scene to the rest of the world and emerging markets in particular is the importance of the ecosystem, especially in the earlier stages, especially when companies are so small and young and the ideas are just ideas. They need angel money. They need the networks of friends and family to be able to get those ideas off the ground. And so I think creating more effective ways of allowing Africans to invest in African startups, that is something that's missing. Because, let's be honest here, so much of the money in venture capital comes from DFIs, comes from international institutional capital that may not understand or even have the right priorities for driving economic development in Africa. So I think if we're able to create frictionless platforms that allow affluent Africans to be investing in African companies, whether they be, asset-light, highly scalable startups, or startups that need a lot of trade finance and working capital, that should be happening. We should have Africans investing in Africa.
Why do you think it's not happening?
Well, look, I think many reasons, but one of the reasons I think is we're borrowing a lot of financing models from other parts of the world. Venture capital in particular is one. It was created and perfected, if you could say, in the U.S. And people have cut and pasted, for the most part, that 2%, 20% carry model to this market. Does it work? We don't have an IPO market here. We don't have the same dynamism for the exits that make the financials or the economics of venture capital work. So, not having a native model to do it is one of the obstacles. And so we don't have to reinvent everything from scratch, but maybe we can design models that are more appropriate for the needs of African businesses, but also find investors that understand the African model better. I mean, one of the reasons it's easier to raise a VC fund from foreign money is because that's what people understand. It's like, oh yeah, no, of course, 2%, 20, done. That model, what is that? It's a CapEx model for SMEs? I don't understand that. Okay, I'm afraid. I'm an institutional funder. It's off my list. Yeah. So I think innovating more in the financing sector. Now we talk a lot about financing innovation, but innovating in finance itself needs to happen more. And I think where the DFIs or the governments can really effectively impact the overall market is financing the innovation in the financing sector to have more appropriate financing vehicles for small and medium-sized enterprises and companies in Africa. So what excites me the most is the tremendous potential that can be unlocked and captured from this transition going from analog informal markets to digitized peer-to-peer markets. And look, if you look at what's happened in the US and Europe and other more developed markets, we're using technology to make efficient things that were already doing fairly well, right? There were institutional players that were managing, whether it's taxi companies or banks. And the digital economy is coming in to make those work a little bit better. Well, Africa, or the informal markets in Africa, already work that way in an analog way that has been operating that way for thousands of years. And what we're seeing is this transition to doing the same things, but using technology to enable those transactions. And so the thing that I'm most excited about is seeing what technology can do to unlock value in that transition. People always talk about M-Pesa and digital payments in Kenya. I think that's the perfect example, right? It was an informal, cash-based activity that then was digitized, and because of that digitization, unlocked tremendous value. That can happen in all sorts of different sectors, whether that be selling to Sparza shops, whether it's helping taxi companies operate a little bit better, all sorts. So I think that's the revolution that we're going to see, and all the elements are there. There's high penetration of digital tool use, high penetration of digital payments. I think the playing field is ready, or the enabling environment is there to make that transition happen very quickly.